So Venture Capital Trust Fund has been around for about 20 years. It was set up by an act of parliament in 2004. Our first investment was done in 2006, and since then we've financed about 13 funds. We mainly focus on impact because we are set up by government, so we have specific things we are looking out for. I think one of them, of course, is the obvious one, is that the funds must create jobs in Ghana. So we look for that. And then, of course, because we are investing in SMEs, government tax revenue is important, ESG is important, and a host of other impact measures that we look out for. We are mostly catalytic, which means that we will go in first, we'll write the first check if we have to, and we'll support the fund manager to go and raise follow-on or further funding. I think I'll end it here, and then maybe further questions will come. Thank you.
Thank you very much. And so we'll pick up from Sam. Sam, you can hold on to the mic. Since in your intro you talked about gender lens investing and all of that stuff, it'll be good for you to tell us what does it take to be a gender lens fund? And for you as a gender lens fund of funds, what are some of the challenges you've had identifying that category of fund manager? So,
okay. Thank you, Sam. I think if we all cast back 20, 30 years, the private equity industry, it's been a male-dominated industry, right? You have, men coming together, forming vehicles and working and employing one or two females, and also as they invest, they tend to invest in male-dominated companies. So we're trying to be catalytic in that, and we're trying to be inclusive. So we're not being exclusive when we say gender lens investing. We're looking to see fund teams that show diversity in leadership. And I'm looking at Mirabel, who was with Injaro Capital, or is with Injaro Capital, excuse me. And you have, co-partners where you have a male and a female, and that's great for us. So we don't say that we don't invest in where we see diversity. We're happy to support those funds where there's diverse co-GPs working together. However, it is not an easy thing to have a co-GP where you have a male and a female naturally in existence when they come to raise funding. So we don't push it on people, but we describe several other levels at which you can demonstrate that gender lens investing is part of your investment strategy. And we caveat all of this by saying that being inclusive and bringing in gender diversity makes a difference in your portfolio and your portfolio performance. We believe that when decisions are taken with diverse genders, you, in the long run, get better decisions being made. So we look to see, what do you have on your investment committee? Is it diverse? Is it inclusive? There are many, many accomplished women across the continent that can help in investment decision makers. So we're asking that funds go out there, or fund teams go out there and look for diversity, look to include or have the right women on their investment committees to make this happen. We're also looking down at, okay, so GP level and then senior management team within the investing vehicle. Who do you have? What do you have? Do you have a diverse team? Do you have strong women, strong men working together, brainstorming together and making decisions? That's another level that we look at it. We look at all the other governance levels that might be in the investing vehicle. And then we also look at who or what do you invest in, right? And of course, women-owned businesses are something that we look out for. Women-led businesses is also something that we look out for. So you could have a male owner, but you could have a woman-led business. In the past, most of these were schools, but I think things are changing now. So you see several different businesses that are either woman-led or woman-owned. And then, of course, you want to look at job numbers and who or which gender is being hired by the capital that's going into these companies. So we have a target from the Muscat Foundation to make sure that we have the right breakdown, the gender breakdown in the number of new jobs that we sustain or create by the fund. And so we are guided by that. But let me say this, Sam, that we have found that some of the investment vehicles we look at, when we explain our criteria to them and they go back and check, they find that they meet the mark. They find that their companies are employing significant numbers of women. They find that they have senior management teams with significant women representatives. They may not have a diverse GP. They'll find that they have an IC that has women on it. And what we also want to do by this fund is also to close the gap, because there's been a gap in terms of women-led funds or investment vehicles accessing capital. So what we want to do is to encourage women-led GPs also to come along. But when we say this, we're also not saying that Mrepa Capital is excluded, but we want to see that Mrepa Capital is meeting the other criteria that make up a gender lens investing fund. So that's one screen that we look at. Now, the other screen that I must mention is that we're looking for funds that are investing in SMEs. So what does that mean? We want to see an investment strategy, and maybe I'm answering my second or third question, but let me just end it there. We want to see an investment strategy that is writing ticket sizes of between $50,000 and $4 million. It's a wide range. So if you come to us with an investment strategy that says $50,000 to $4 million, that's not a strategy, right? It's a very broad spray and hope that you get something good out of it. You probably will come to us with an investment strategy that says, I'm going to do gender lens investing in the bracket of $50,000 to $250,000. And then based on that, you're focused, you're targeting, and that is probably going to get you to where you want to be. So I'll stop here and add on a bit more a bit later. Thank you, Sam.
Thank you. So I think we'll come to Diana, since she's a female-led or female gender lens strategy or focused entity. I want to hear from Diana. Can you shed a bit more light on this vehicle that you're a part of, right? It says that you are an SDG impact fund of funds. What does it mean to be an impact-led or impact-linked fund of funds? If you can shed a bit more light on that.
I don't think this is working. Okay. I got this. Thank you. Okay. Thank you, Sam. Chigaba is intentional about putting the UN SDGs at the heart of financing. So the fund is specifically designed to target funds and businesses that are making a positive impact towards achieving the UN SDGs. If you look at our priority sectors, agribusiness, clean energy, light manufacturing, technology, healthcare, and education, they are directly linked to SDG 2, 3, 4, 7, 8, and 9. And we also have the 3 cross-cutting SDGs, which are 1, 5, and 13, no poverty, gender equality, and climate action. Earlier this year, with support from IIGH, the team worked with the evaluation specialists to implement our impact measurement and management framework, where we are embedding impact at every level of the investment stage. So if you look at the pre-investment stage, we are embedding and integrating impact in our screening tools, in our due diligence questionnaire. We'll do an overall impact analysis before we make an investment decision. And once an investment decision is made as well, we're integrating impact into our legal agreements, into our term sheets. And at the portfolio monitoring stage, we're working with the fund managers to implement the right economic, social, and governance policies, because we know that if the world is supposed to achieve the sustainable development goals and be more equitable and more sustainable, then we need to implement the right policies. And we believe that the work we are doing will provide the muscle for a new wave of funds and businesses who are actively and keen to accelerate their SDG goals. And so that's it for what we're doing at Chigaba.
Okay, thank you very much. I'm sure when we get to the Q&A session, there are a few people here who may have questions for you on that. But let's go to KB, Kwabna Boaman. And as one of the pension fund managers investing in the alternate asset class, in fact, you have been a forerunner in that compared to others. What has been your motivation for taking that lead role when it comes to investing in the alternative asset class, and specifically the PE and VC funds? So.
Thank you. I think there are two key points for us. The first one is diversification. Back when we started the management of pension funds in 2011-2012, key of the investments were in Government of Ghana Treasury bills. And as the yield curve corrected, we saw a switch into Government of Ghana bonds. But then still we had over 90% allocation in Government of Ghana securities. And in 2016, we felt that there was a need to diversify our portfolios. And that was when the conversation around moving into alternatives started. And that drove us to do our first investment on behalf of our pension clients in private equity investments. The second objective for us is the fact that if you look at the investment guidelines for pension schemes, there's a fourth objective that says that the pension scheme should play a developmental role or in developing the Ghanaian economy. And we believe that there's no better way to impact the Ghanaian economy than having direct investment in the real sector. After funding government for more than 10 years through pension schemes, you don't have pension schemes clearly being marked on any government project as being a key sponsor of those projects. But if you have pension schemes investing in private equity firms, we get the opportunity to physically see where the resources are being channeled and the impact that pension schemes are making as far as the development of the Ghanaian economy is. So these are the two key things that drove our investment into the alternative space.
As a quick follow-on before I go to Percy. So it's been since 2016. Would you say that you are happy with the outcomes to date?
Yes, we are. The interesting thing is that the first investment we did on behalf of our clients in Oasis, we only had 4 pension schemes that came along with us. In our second investment in Njaro, we had about 10 or 11 pension schemes that came along with us. And in Oasis Fund 2, we're hoping to do even more than that. In Miripa, we are also looking at bringing in new LPs who haven't invested before in the alternatives. So we think that the success story has been good for us in trying to bring along new or additional pension schemes to join the journey investing in the alternatives.
Thank you very much for that. Percival, so you mentioned in your intro the catalytic mandate that VCTF has. It will be interesting for you to tell us how you balance that catalytic mandate with also the need to be responsible and ensure that you're not getting, for lack of a better term, rogue investors in the space, investors that actually give the likes of KB, Kwabena Boama, Sam, and Dinah the confidence to also put in capital. So can you talk us through that a bit? Yeah.
Thank you, Sam. When Kwabena was talking, I was nodding my head in satisfaction. It's been more than 14, 15 years since we were trying to get the pension funds to invest in this sector. And now all the numbers coming on board are great. And I think it goes to the answer to the question as catalytic. When we started, there was practically the fund managers were not available or readily available, if I could use that word. So we had to get out there and literally actually try and create that ecosystem, create fund management teams. And we knew that some will survive, some will not, and that's what happened. Some have survived and done very well. Those who didn't survive, didn't survive. But we don't, even though we are catalytic in nature and we'll write the first check, it doesn't mean that we would relinquish our duty of due diligence of ensuring that the team is capable of doing what they have set out to do. So we look at everything that perhaps Kwabena will look at, and perhaps even more, because for us, we are putting our neck out there as seeding first-time fund managers who has never actually done this before. So our scrutiny can be quite hard. I'm sure there are some people in this room who have already gone through some of our due diligence. Some of the fund managers who approached us took them quite a while before we were able to sign the check, because we are going in there as a first time, but we also need to make sure that other LPs coming along with us are happy. And so, yes, we are catalytic, but we also ensure that we are going into investment with the right people. We emphasize impact, which is something that some people mistake that to mean that because we emphasize impact, it means that there would be sort of de-emphasizing on financial returns, which is never true. Because if you look at our fund management agreement and shareholders agreement, the expected returns are still standardized returns. So the typical one you see in an LPGP structure is something that we also welcome. So we don't disadvantage our fellow LPs by saying that we are catalytic, so reduce it. In the past, we have considered first loss strategies, but we haven't continued using that because we believe that right now the industry and the LP system is getting to the point where they now understand their roles. I think one of the things we've also done is if we realize that our co-LPs, especially the local LPs, do not understand the fund manager or do not understand the asset class, we have tried to collaborate to bring them along so that we can invest in one fund manager or the other. These are some of the things at least we do to balance out our role as catalytic investors in the ecosystem. Thank you.
Thank you very much. And you can hold the mic. I think we'll start from you, then move to Sam, KB, and then Dinah. You've all talked about your funds, the structure that you have, and what makes you, in a way, unique. But what we would like to hear, and I'm sure those in the audience who are either raising funds or know someone who's raising a fund or just have a general interest in the topic, what do you look out for in a successful team, right? So if you can share, and then we'll go down the road.
Okay, I think it'll be easy to say we look at strong team, but then again, what is strong team? Yes, the fact that you have not managed a private equity fund before, if you're a first-time fund manager. If you are not a first-time fund manager, we are happy, but of course we'll look at your track record. Because once you stick your neck out there that you are going to do this business, and you've managed successfully to raise the first fund, then obviously everybody is looking at what you did before and how you did it, whether you were successful or not, and if you were not successful, what was the reason? So track record is important. But for our emphasis on the first-time fund managers, the team, first of all, the team cohesion must be good. I know that for a first-time fund manager, they may not have worked together for a long time, but the background of the people involved must be solid. They must have a very good background to give us comfort. And when I say background, I'm not just emphasizing just finance background or banking background, but because private equity, especially for where we are going, SMEs and all, some people with operational background is also very important. So if your team has a blend of that operational background, it helps a lot, because when it becomes difficult at the SME level, there's somebody who can understand them better and be able to move and build value. So it's important that the team is well composed, it's very dynamic, and it's not just tilted towards one side. It has to be a good blend of that. Because we are government funded, we always look out for the opportunity to leverage the money that we are giving you. So as a fund manager, I think one of the things we look out is that you should have the ability to raise money from other investors, LPs, whether local or foreign. It is one criteria that we are interested in. Because for us, government money is limited. Everybody accepts that. So when we give you 1 Ghana cedi, we expect that you are going to get maybe 2 or 3 Ghana cedis additional to come so that we deploy to SMEs. And so that is very, very important for us to look at. I believe as a team and as a fund or the team dynamics, if you look at what we have done in the past, it hasn't always been, should I say, success. We have had some difficult times with the team. But what makes it important is we are constantly engaging with the team. And in some cases, when it is necessary for us to do capacity building, we do, to build the team to make sure that they move to the next level. So we actually get involved in that. We just don't look at the team as it is. We look at people who are also ready to learn so that together we can build. I think those are some of the things we look out for. I'll leave the rest for my other colleagues.
Okay.
Thank you.
Okay, thank you very much. So Sam, in addition to, I mean, you've touched on the gender lens part of your screening. So in addition to that, if there are any additional criteria that you look out for besides what Percival has already shared, why don't you touch on that?
Thank you, Sam. So Percival has mentioned almost all the things that we look at, but I'm just going to add the investment strategy, because the investment strategy speaks to everything. It speaks to the terms that you're coming to us with, whether those terms are realistic. It speaks to whether you've been proactive in understanding what kind of investor I am, right? And knowing that, yes, I may anchor you, but I still want to see your fundraising strategy, plan. Traction with fundraising, who are you targeting? Are you targeting the right LPs, or are you thinking of going to the top tier LPs as a first-time fund manager? I think all of those things are realistic questions that a team should look at. I think you can never underestimate track record. And yes, for an early stage fund manager or early team, your strategy as a GP is how you pick your team members to come alongside you, because they will come with investing track records that they can bring to bear on the table. So those are the key things that we look at. As I mentioned earlier, the proactiveness in knowing what I'm looking for, I think, is key. So SME strategy on top of gender lens investing, let's meet at that intersection and be able to convince us that you're in this for the long haul, and that if we anchor you, that you're coming to us also with transparency, that you know what your minimum viable fund size is. And so you're looking to get to 30 or 40 million, but you've done your fund economics in a way that you can start investing with 10. And so you very clearly say, I want you to come alongside my 30, 40 million fund with 25%. But I'd like for you to front load your commitment to enable me get to first close as quickly as possible, so that I can add on to my track record. There's also the whole thing of angel investing or other investing experience that you have as a team that you can bring to bear. And if you're proactive enough, look to see if some of these deals can be warehoused onto the fund that you're looking to create. So all of those things speak to how, intense you are, and how, there's this word that is very popular now, intentional. Intentional about establishing a fund and knowing how to bring LPs together, the right LPs together for your first fund, and how you progress from there to the next stage. Yeah, thank you.
Thank you. KB?
Yeah, just to add to that, I'll talk about the processes. We believe that past performance is not a guarantee for future performance. However, the past performance gives you an indication of what the future will look like. So the whole processes that the GP has in place, first to be successful, but more importantly, how can that success be replicated? That can only be done if there's a proper documentation of their processes, where they've clearly picked out their successes from their learnings from their failures, and then they've also highlighted their successes over the period. So the processes, which also covers their operational manual, their compliance to policies that they themselves have put in place, how they stick to their investment strategies. On the people side, they being able to even articulate those values or beliefs, their analysis of the economies or the markets they want to play in, just to be sure that what they set out to do, they really understand and are able to do, but more importantly, repeat what they did in the past. Thank you.
So we all know that the investment landscape is rapidly evolving. A couple of years ago, as an emerging fund manager, you just have to demonstrate that you could get a high IRR or just be strategically located probably in Ghana or Nigeria, and you will raise funds easily. But right now, investors' expectations have changed. And so if you're an emerging manager and you're looking to raise capital from LPs, then you need to be able to demonstrate a very comprehensive approach where your investment thesis and your structuring is right. Okay, and so that'll bring me to my first point, which will probably be diversification. You'd need to be able to deploy capital across different sectors, different stages, different geographical locations, so that you'll be able to mitigate some of the risk involved in investing of late. But you also have to find a balance where you're not doing too many strategies at the same time, because as an emerging fund manager, then it then affects your ability to fundraise. And so I'll say, get the right investment thesis. It should be coherent, it should be unique, it should be ambitious, and it should have a very clear focus area. Thank you.
Thank you very much. So I think at this point, I will throw it to the audience. Percival has a question. But it's here. After Percival makes a submission, it will be good to hear from you guys if you have any questions. So, yeah, Percival, go ahead.
Yes, I'm sorry. Apologies. I just wanted to add a couple of things. Just basic. I touched on but this one is basic because we are set up by law. The law prescribes who should get the funding. Mm-hmm. And one of the basic criteria is a SEC license. Mm. So I think I forgot to add that. You must have a SEC license before we go in. We have in the past sort of assisted fund managers to get that SEC license. So if you don't have it, it's not necessarily, a full stop for you. But it is important that before we deploy any capital to anybody, that fund manager must have a SEC license. And the second is, again, from the law, is because you are required to have the fund as a limited liability company. Now, that has its own challenges and problems. Unfortunately, that is the law that we have currently. We are working to ensure that we remove that hurdle completely from the industry by bringing in the Limited Partnership Act. We are working on it. But before we get there, it's important that your fund strategy includes a domiciliation of a limited liability company in Ghana. Even if you have a Mauritius fund, then there must be a feeder fund where we can put in. And for fund managers who are looking at regional funds, you go to Ivory Coast, you go to Senegal or Nigeria, and then Ghana. Still, we don't say no, but we would be interested in how much money you would deploy in Ghana. As I said, the leveraging factor is important for us. So if you are capable of, and we understand that some external LPs would be interested in you looking at regional instead of just Ghana, it's okay for us. But to the extent that we are doing that, we'll also be interested in how much money you can invest in Ghana. I think those are the basic ones I wanted to add. Thank you.
Okay, thank you. And I believe that also applies to Stanbic, with the SEC license. Okay, not so much MasterCard Foundation Africa Growth, MasterCard Foundation Africa Growth Fund.
So
that's the SEC license specifically.
So no, the SEC license not specifically, but what we do say is that you have to comply with all the rules and regulations in the jurisdiction.
Okay.
That so it will be required, yes, because SEC license is standard. Okay. So if you're a fund in Ghana, yes. We also require that our funds are domiciled in Africa.
Okay.
So you will have to have, if you've started raising funding from a Delaware pool, you probably have to have a parallel registration in your choice. So I'm not going to say Mauritius, though most people go to Mauritius. But those are things that the fund manager team should be aware of and know what it takes to do that in order to move us forward. And the reason why we're doing that is because we want to encourage funds to be ready when they're going for their second fund, to be able to go to Kwabna and other investors on the continent to be able to raise their second fund.
Okay, yeah. Thank you. Good. Questions? So we have one question there. Do we have a mic we can send to him? Any other questions? So we have a second question there as well. So you can ask the question and you can indicate who you're directing it to.
Hello. Okay. Good afternoon. Thank you very much. And I think the sort of width of or coverage of the topic has been very useful for me. My name is Tochukwu. I work for AVPA. Speaking of just catalytic capital, I think most of what catalytic capital entails has been covered from most of your responses. I just want to prod a little bit into, obviously you've spoken about impact first, patience, and a few other components of catalytic capital. But I just wanted to learn, perhaps because of time you couldn't emphasize it, because one of the behaviors of catalytic capital as well is that it is nurturing, as well as sensitive to experimentation. So I want to know at what level you sort of align with that idea of actually nurturing, whether that is nurturing at fund manager GP level or at deal level. So I didn't hear much of that as a behavior of catalytic capital. And maybe that's because of time. So if you could emphasize that, and maybe either MasterCard or the gentleman at the extreme.
I'll start, and I'm sure Percival will add a few and others. So you're talking about nurturing early stage or first-time fund managers. I think one of the principles is to be sure that you separate the two, right? So do your investment in fund managers that create a portfolio for you, but also do not leave behind those that maybe do not make it in the first cut. So for our fund, for example, when we started, we had, in the first 12 months or so, we had over 1,000 applications for funding. About 70% of those were not fund managers. So a lot of them were entrepreneurs who saw the fund, saw the application, and went through them. Of the 300 or so that we had to look deeply at, let's just say quite a significant number of them needed nurturing, as you're talking about. So what the MasterCard Foundation, not the fund, and MEDA have decided to do is to establish a program with what we call accelerator firms, and those accelerator firms will be working to help some of those fund managers to be able to get up to speed, to be at a place where they can be investable. So I guess what I'm saying is we do it, but we separate it from what we do in terms of investing. But having said that, we come not only as a capital investor, we come with a consortium of partners that help us to get our fund managers or help our fund managers to be where we want them to be, especially on the impact side. So for instance, we have a partner, Criterion Institute, which focuses on gender diversity, equity, and inclusion. And what they do is, during due diligence, they begin to engage with fund managers to say, what is your gender diversity plan? How can we help you? Not immediately, but trying to understand, of course, they would have said they have a gender lens investing strategy. So trying to understand what capacity building, what team strengthening, what approaches and what tools they need to be able to do that. So we do that alongside our investing as well. We also have what we call a BDS partner, ES Partners. ES Partners as well helps the investment vehicle and the portfolio companies to be able to achieve growth, because value creation doesn't come just by putting capital in a company. If it's 100,000 or 1 million city company today, you want it to become a 10 million or 100 million company in a few years so that everybody grows and it becomes better. And for us, we don't divorce it from impact, because we believe that 100 million city company that has grown will employ more people. And that's our ultimate objective. And we're also believing that by applying commercial principles from day one, that they will be sustainable, right? So those are the kinds of things that we use to differentiate our approach in the market. Thank you.
If you can touch on it quickly, I think we're running out of time. But if you can touch on it quickly, and then we'll go to the lady who had the question there.
Okay, I'll be very brief. So we don't leave our fund managers to dry. We attach technical assistance to the fund managers. I think you mentioned what we do at the GP level and at the portfolio level. So at the portfolio level, we have a TA available to assist the fund manager in difficult situations where they can't handle it, bring some expertise on board or something. Sometimes we actually go out there to train portfolio companies as a way of enhancing the fund manager's work. So I would say that is one. We have a mandate to develop the industry. Not me. Okay, we have a mandate to develop the industry as well. And so in addition to that catalytic role we play, we also work very hard to develop and support our fund managers in the industry. So you can think the industry-wide assistance, making sure that the regulatory standards are good and supportive, making sure that other LPs within Ghana come on board. And that's why I was saying I was very happy that the pension funds are coming along with us, and so on and so forth. So these are things that we do to support as we put money in to help the ecosystem to also work for us. I think I'll end there. But last thing I'll say is that in order to make sure that we grow the fund management, the number of fund managers in the country, we are also going to institute what we call the Fund Manager Development Program. So we'll take young fund managers through a program of 2 years, let them learn from the existing fund managers, give them the necessary tools, and then seed them afterwards, warehouse some funds with them, and see how they perform. And then after that, we can then go on to full-blown managing funds. So we are doing all that in order to make sure that the money we put out there is helping the agenda we have created in terms of the objectives for our act. That's what we do. Thank you.
Thank you very much. We have time for just one question. I think we've even run out of time, so we'll take, Barbara, your question.
My name is Barbara Gansa, by the way, but I think the question I was going to ask had to do with what other forms of support is being provided to fund managers, especially first-time fund managers, which more or less has been addressed. So I think I'm fine, but I'm happy with the conversation so far, and it's a pleasure to find out all that is happening to help grow the industry in Ghana. Thank you.